Hello guys, welcome to this introductory video on mutual funds. In this video, we will be going to understand the concept on mutual funds, how to select the top performing fund from various categories of funds, and how to invest in them. I preferably use the Coin app, which is developed by Zerodha Broking Limited, the largest broker in India. If you are already investing in any other stockbroker, such as Grow or Paytm Money platform, you can continue to invest using that platform as well. In this video, I am going to show you the interface of Coin app and how to find the top performing fund from this application. So this is the interface of this application. In this search button, if we see, there are 6 categories of funds, namely equity, debt, hybrid, index funds, funds of funds, solution oriented funds. We will understand each category of fund one by one. So first we'll take with equity mutual fund. Equity mutual fund, as the name suggests, that this fund invests mainly in the equity of various companies. Equity refers to the shares of the companies. If we go to the drop down menu of this equity mutual fund, there are various funds listed over here. For example, flexi cap, large cap, mid cap, ELSS, small cap, multi cap. So if we just select any one fund, let's say large cap fund. So inside this large cap, we are having funds given by various asset management companies. For example, Axis, ICICI, SBI, Mirai Asset, HDFC. If we go to Axis Blue Chip Fund, there are 2 categories of funds for each AMC: growth and IDCW interim. So let us first understand the difference between the two categories. The growth category refers to the fund which directly invest in the securities or the shares of the funds, and it tries to replicate the total return of those shares as it must be when you have invested in directly in the shares of the company. On the other hand, IDCW interim refers to the net value of the fund after the companies have declared dividends or have given any benefits like stock splits, bonuses, or any kind of benefit to the shareholders. So those benefits are directly incorporated in the fund value, and the fund value itself is reduced or is increased by the corresponding amount. But in the growth fund, those benefits are not directly given into the fund value, but they are given as indirect benefit. So the growth fund usually is more beneficial than the IDCW interim fund. Now if we see in the Axis Blue Chip Fund, which is the growth category fund, we can see various types of parameters listed over here. We will see one parameter one by one. For example, the current NAV. Current NAV stands for the current net asset value. So this blue chip fund has the net asset value of 48.87. This is the price of each unit of this fund. Next is the CAGR. CAGR refers to the compounded annual growth rate. Compounded annual growth rate refers to the rate at which your amount is growing for any particular period of time. For example, here it is selected CAGR for 3 years. So 3 years refers to the compounded annual growth rate for the 3-year period. So here 11.95% is the annual rate. But this rate is for 3-year period, which means if we grow this amount, or if we multiply this amount by 3, so the total return for the 3 years is approximately 33 or 34%. But if we select any different period, for example, if we select 5 years, so for the 5-year period, the CAGR increases to 12.76%. So the more the time period of the fund performance, the more better it is to replicate for the future years. So we have to see a larger time or the larger horizon to judge any performance of any fund. Also, we need to see the fund launch date. For example, this fund is launched on 1st January 2013. If there would have been a newer fund which is launched just 3 years back, its 5 years data or the 3 years data would be exactly the same, because the fund has its life only for the 3 years till now. But for older funds, we will have different values for 5-year period, for 4-year period, and for any other period. For judging the performance, we should see the long-term horizon of any mutual fund if we want to invest it for a longer period of time. The next is the minimum investment. Minimum investment refers to the amount that is required to be invested at one time or in systematic investment plans. The fourth option is the exit load. Exit load refers to the fees that will be charged if you exit from this mutual fund within a stipulated period of time. For example, here it is shown that an exit load of 1% will be charged for the investments more than 10% if redeemed or switched out within 12 months. So if you exit 10% of your units or more than that within the 12 months time frame, so the 1% of that value will be charged as your fees and it will be deducted from your redemption value. The fifth point is the expense ratio. Expense ratio here refers to the fees which is charged by the AMC or the asset management company to manage your funds. So you can consider it as a broking fees, as you know that for shares that you take or the delivery of shares that you take from any broking app, you have to give various amount of charges. For example, the security transaction charges, brokerage, GST, stamp duty. So this expense ratio covers all of that. And this is charged by the AMC in the current NAV value. So for a period of time, for example, a month or a 6-month time frame or quarterly, as the company may prefer, it will charge this expense ratio and your NAV value will automatically be adjusted after deducting this expense ratio. This is a chart which is depicting the performance of this fund. So we can select various time horizon, for example 3 months, 6 months, 1 year, 2 year, 3 year, and the maximum, which refers to the time frame since the inception of this fund. So this chart depicts a pictorial view of how the fund is performing over the different time frames. For example, we can just look and move the cursor on this chart and we can see at a particular date, for example, which is 15 January 2020, and at that point the value of the fund was 35.23, and if we just go down at 18 May 2020, the value of fund dropped to 28.16. So this is the period around which the share market collapsed due to the pandemic, which is COVID-19, as you already be aware. And after that, the stock market rose again and reached new highs. So we can see at various points of time what is the fund value and how the value is being grown. The next is the AUM. AUM refers to the asset under management. Asset under management means how much of the total portfolio values or the asset values the fund is currently managing. So it is around 36,890 crores for this fund. So it is managing this much of the total portfolio values. The fund manager of this fund is Mr. Shreyash Devalkar, and this fund is launched by the Axis Mutual Fund AMC. Now, if we just go down further, we can see the various sectors and the fund holdings of this fund. This is the one of the most important part which one should take care and look carefully before investing into any mutual fund. So in this fund, the sectors where it is allocating the funds are majorly financials, consumer discretionary, information technology, finance, and a small percentage in various other sectors, for example, materials, energy, etc. And if we see the fund holdings, the major fund holding of this mutual fund is inside ICICI Bank Limited. So the 10% of the total assets under management is held under ICICI Bank. So the total fund was 36,890 crores. So out of this, 3,689 crores is already invested in ICICI Bank Limited only. And the remaining 90% is then further distributed in various other companies, for example, Clearing Corporation, Bajaj Finance, HDFC, Infosys, and rest others. So the allocation percentage refers to the weightage of each stock the fund is giving into. So this is the whole idea of any mutual fund, is that the mutual fund allocates its total portfolio or its total invested amount into various companies, so that the risk is diversified across various companies and it is not limited to any single particular company. Now, why I told you that this is the most important part? It is why, because, for example, if you are having ICICI Bank Limited as a top weightage share in your portfolio already, and if you are further investing in a large cap mutual fund like this, so it is going to increase your exposure to one particular company, ICICI Bank Limited, and it will not diversify the risk of that exposure. So one needs to be thoroughly checked that the fund which is it investing in is actually investing in which particular companies, and those companies should not overlap with the major portfolio allocation of the shares or any other investment instrument. So this was all about any particular fund. Now if we go back, we can view the performance of any other fund like this, and we can also sort the funds based on the AUM, the minimum investment, and expense ratio. For example, here the funds are being sorted on the basis of the assets under management. So if I sort the asset under management in the descending order, so the first fund is listed with the top assets under management as the maximum one, and in the bottom is the minimum assets under management. Now if we go back again, we can see that there are other categories of funds as well. For for the next categories, we will look into the next video. So stay tuned and thank you.